Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, I'm Dongjia Cheng, Tony. Now let's start today's group discussion. Good evening everyone. So first, let's look at two headlines. The first one is about peace talks, which was the hottest news last night. But I have to pour a little cold water on that. We might need to look back at some history from 2022 first. There has been some progress on tariffs, so let's take a quick look. The ISM services data actually came in better than expected, and the general earnings reports were also positive. But the economic data is actually pretty good news, but I think when it comes to earnings, we really need to take another look at that later. I'll get into the details for everyone in just a moment. First, there was a report yesterday, the New York Times mentioned that, according to an official, on the second day after the U.S.-Israel coalition launched their operation, Iran's intelligence agency, through indirect channels, reached out to the U.S. CIA. They expressed a willingness to seek peace, but of course, there are some challenges ahead. So let's take a look. Basically, Iran would have to give up its commitments. This missile and nuclear weapons programs, and then stop supporting Hezbollah and other overseas proxies, and also keep the original leadership team in place. But it was only hinted at, not actually promised. Let me explain this to everyone. Basically, in principle, what they're getting in return hasn't really gone beyond what everyone expected before, because during the peace talks, that's basically what was discussed. Those were pretty much the main demands. But the strange thing is, according to reports on the 4th, there were already peace overtures the day after the city was opened up. But who exactly was making these peace overtures? That's actually pretty debatable, because on the very first day after the city was taken, 48 high-ranking officials were executed. After those 48 were gone, who else would have the authority to represent Iran in peace talks? I think that's pretty odd. Anyway, let's take a look at this news. How should you look at this, whether it's real or fake? Well, yesterday the market reacted as if it were real, but the problem is, let's take a look. Yesterday. After some fluctuations, oil prices closed flat, ending at $81.40 a barrel the previous day. But today, when the market opened, you saw oil prices only going up. Actually, up to now, let me tell everyone, oil prices have been a very accurate indicator. You should look at oil prices first. If there really is an improvement, oil prices would close lower. But if things keep getting worse, oil prices will still close higher. But what I want to tell everyone is that it's very likely that the way things play out next will be similar to what we've seen in the past, especially when looking at how things have unfolded in the Middle East. The pattern, yeah, will probably follow that path. If, this conflict can't be resolved within 1 to 2 weeks, then it's possible that oil prices will stay high. For example, for Brent crude, it could fluctuate between $85 and $90, moving up and down a bit, waiting for the moving averages to converge. Then, if the conflict escalates again later, there could be another surge upward, so be very careful. That's the case. But if there's no way for a clear direction to emerge within, say, 2 to 4 weeks, then it's very likely you'll see oil prices move in this pattern. What this mainly reflects is the possibility of a prolonged military conflict. Iran actually came out yesterday and denied this, so you can see that oil prices have been pretty volatile. As for this news, let me share my thoughts with everyone. I don't think this is actually true. So about the conflict itself, you really need to look into it. I don't think we should be too optimistic. The main thing is, Bloomberg had an in-depth report on this topic, and I happened to see something pretty interesting today. He said, the risks of war are hard to predict, so you had better open up your 2022 notebook and review the past to understand the present. The wording here is actually pretty unusual. It's not really how you would translate it normally. Most translations would not be quite like this. It's starting to ferment. Usually what people expect is just to go back and look for your notebook. Actually, what I want to tell everyone here is that last year, regarding the market and Israel, the 12-day war where Israel proactively attacked Iran, the reaction wasn't very strong, right? In the end, it was because Israel couldn't take it anymore and asked the US for help. The US used the so-called midnight hammer to bomb Iran and put an end to it. Now, there's actually something strange about the aftermath. As we mentioned yesterday, the real whereabouts of the enriched uranium are still unknown. And today I heard a rather dark take on this situation, which is, yeah, if you want to talk about Iran, you could say Iran told the US, you want me to hand over the enriched uranium, huh? Well, didn't she succeed last year? So I'm not going to give it to you. So actually, the US is just... Actually, as for how well the US did last year, even they themselves don't really know. They only have a rough idea, not any detailed concept, because there's no way to verify it. So when Israel or Iran says things like this, they're just catching them on a technicality. But here's an important point mentioned. Investors are worried that this situation might drag on for a long time. So here, they quoted the head of trading at Credit Suisse in London. His name is Rochester, or Jordan. Let's go with Jordan, since everyone's more familiar with that name. He brought up something that I think is a pretty good concept. This is not just a war, it's also a logistics crisis. The shock to trade conditions is significant. About 20% of personnel can't get out, but that might only be temporary. Still, it's a huge impact, and everything could get stuck. Especially, we need to pay attention. If we see that shipping rates might dip a bit in the next few days, don't be fooled by that. Don't get too happy about it, because in this kind of situation, no one is going to take the risk to go through there. Whether it's the Persian Gulf or the Strait of Hormuz, everyone is just going to obediently take the safe route. The route through Cape of Good Hope, well, that one, going around Cape of Good Hope, basically adds about 2 to 3 weeks to the journey. But the problem is, this affects the scheduling of shipments, which will definitely have an impact. So shipping costs are bound to go up. I just want to let everyone know that this is probably unavoidable, even if you want to have the whole. As for things cooling down, the trend really has to show a clear cooling before anyone will dare to set sail. Otherwise, even with more insurance or naval escorts, you're still gambling with your life. No one is going to take that risk. All right, so here, there's a manager from a company called Markive. Affairs. This sounds like a Middle Eastern name, right? So that means investors are starting to get nervous. He mentioned that on Monday, they thought it was just a brief conflict. Then today, which is actually yesterday, Wednesday, they started to process it. It's turning into a longer, more prolonged conflict, he said, referring to an overseas war back in 1990, that within a month, oil prices soared to $100 a barrel. At that time, the S&P was basically moving sideways, and at its lowest point, it dropped by 10%. Looking at the performance of the bond market, U.S. Treasury yields went up, rising to between 4.5 and 4.6. The U.S. dollar also appreciated. So what I want to tell everyone is, he was talking about the Gulf War. In 1990, when the Gulf War first broke out, when the ground and naval forces first entered Kuwait, of course, that caused the index to drop. But after the U.S. went in and started fighting, the index started to go up. But what we want to tell you is, oh, this time it's different, huh? It wasn't Iran attacking Israel. Israel struck Iran first, and then the U.S. immediately got involved. So in this case, there wasn't that justification for U.S. intervention or that scenario where America becomes the hero. Now, there's a more serious issue, which is if things really do play out the way they've been saying, with this prolonged situation dragging on, it will actually cause volatility in the financial markets. And the ones who will be hurt the most are still Trump's election prospects, as well as the U.S. economy under him. So we have to see what happens next, because things are changing so much. We also can't rule out the possibility that maybe by next week, Iran's ability to retaliate will be exhausted, and then everything will just rest in peace, things will quiet down, and they'll just get ready to accept the situation. All right, but let me tell you, it doesn't really look like that's very likely. Also, I still want to emphasize that this time, the way Trump started this war, in my opinion, I just feel it's really, settling scores. Well, in The Art of War by Sun Tzu, it says, warfare is a matter of vital importance to the state. It is the province of life and death, the road to survival or ruin. It is mandatory that it be thoroughly studied. This is actually extremely important, so today I even brought The Art of War with me. I downloaded the PDF and sent it to some of the younger colleagues. Now, it's not that I'm trying to act all superior because of my age or anything like that. It's just that looking at the current situation with geopolitics and military conflicts, it seems like in the foreseeable future, the frequency of these events is just too high. So sometimes you really need to have some reference materials on hand so you can understand how things might unfold instead of just getting swept along by the rhythm of the news cycle. We're also seeing some pretty serious situations here. Why do I think things are so chaotic in the US this time? Well, first, let's set a premise. Here, when we talk about the US, not Israel, the US is not going to lose because the military power gap is just overwhelming. But the biggest problem for the US is that in the end, it's impossible for them to end up in a situation where they don't win. Why is that? Well, let's look at a lot of examples, like the Patriot missiles intercepting drones. People say they work amazingly well. The only downside is what? A drone costs at most $20,000, an Iranian one is $20,000. Even if you get an American one, it's $200,000 at most. But a single Patriot missile could cost 3 or 4 million, maybe 2 or 4 million. I forget the exact number. Let's just say it's 2 million, okay? 2 million versus 200,000, even if we count the drone as being more expensive. See, the cost-performance ratio just doesn't add up. Why? Because for every drone that comes, you might need 3 missiles to shoot it down. Yeah, just do the math. Even if you're lucky enough to intercept all of them, unfortunately, the bill you get will make you faint. And what's even more important is, after that, you still have to replenish your stock. Intercepting missiles is really expensive, and then you still have to wait for the resupply. So that's pretty troublesome. Also, he claims he's been very successful. Sometimes he talks about striking targets, like taking out Iranian ships, and says things like, this is the first time since World War II that the Navy has used torpedoes to... They took out an Iranian vessel, but first of all, Iran is definitely not known for its Navy. If their Navy were actually famous, I'd probably die laughing. But anyway, that's what he claims to have done. I think, though, some people say this kind of action's illegal. But whatever, we're just telling you that Iran's main strength isn't its navy or anything like that. The real focus is Iran's missiles, which sometimes can't even be launched properly. That's the key point here. And another thing I find more frightening is this. The duration of military operations is a moving target. The pace is set by the US, and the operation could last anywhere from 6 weeks to maybe even 8 weeks. Let me tell you, that way of saying it is absolutely not how things are. So why is that? Sorry, but I actually have some experience with this. During the Gulf War, the first one in 1990, I wasn't that old, but I was already old enough to understand what was going on. Let me tell you, when the US military was carrying out those plans, the commander at the time was Colin Powell. That's right, Colin Powell. He's the one who later went to the United Nations with that vial of white powder. You know, the one people in Taiwan call Ba-Wei-Er. Back then, the US executed battle plans with incredible precision. Unlike today's uncertainty about how long fighting lasts, they expected battlefield changes, but thoroughly analyzed everything beforehand. If they would have contingency plans for both the best case and worst case scenarios, and corresponding strategies for each. They'd already figured out who to bring in at what time, what kind of resources to deploy, which weapons would be most effective. Everything was part of a meticulous plan. But if you look at things now, one moment they say they have plenty of ammunition, the next they say they need military escorts. Honestly, what this tells you is that they don't actually have a real detailed plan. They're not even clear on how to achieve so-called victory, or even what their actual goal is. So what I want to say here is that America isn't going to lose, but the key issue is that it might not win either. And then there's another piece of news here that's being talked about. During this time of war, companies like Lockheed Martin and RTX, which is Raytheon, are involved. and defense contractors will be fully present. The White House is attending the meeting, and a White House official confirmed that this meeting with defense industry executives took place on Friday. Reuters had also reported news of this meeting earlier, so last Friday, defense stocks were rising. Yes, they were going up. Well, this actually isn't surprising, but we always find out a bit late. I can only tell you that defense stocks might be a bit volatile these days, but as long as you're optimistic about this sector, if this war still isn't resolved after 2 weeks, then you really need to start thinking long term. And in that case, defense industry stocks will have the most straightforward potential. So that's the news. On another note, U.S. Senate has given the green light. Trump, this is a double negative, a double veto. The vetoed bill stated that military action could not be taken without IRS approval, but the proposal was vetoed as well. In other words, it means he can take military action without going through Congress. That's basically what it means. It means Trump can continue to take action. Another important point is that the House of Representatives will probably vote on the 5th, and as we mentioned before, there's a bill being sent. The bill being sent to Congress is about requiring a decision within 60 days on whether to authorize the president to officially take military action. In other words, to formally launch it. So if this goes forward, hey, this also hints at something else. The war might drag on a bit longer. Now, let me tell everyone, this is actually more likely to happen. I still think it will pass, considering public opinion and the way the media reports on it. Of course, American media is patriotic, so at this stage, no one is going to question the war. When will they start questioning it? That happens when things aren't going well in the fighting, or when American soldiers get hurt. That's when some of their more well-known assets take a serious hit, that's when you'll start to see some negativity. But right now, the situation is more about supporting the president. Also, there's another thing, which is looking at the current situation, basically it's like rush into Congress, and then Congress votes, whether it's senators or representatives, they're the ones voting. So in this case, Israel's lobbying groups are, highly skilled and extremely powerful. So I think it's possible that Trump could be given the authority to take action to launch a full-scale war against Iran. And if the fighting doesn't go well, there's a chance that ground troops could actually land. That's one thing to watch for. If the Kurdish armed forces, if they officially start to rebel, meaning they begin attacking Iran's forces, whether it's the Revolutionary Guard or the regular army, then that's basically the start of a proxy war. That's what to watch for in this part. So after these attacks begin, it all depends on how strong they are and how long they can last. But I can tell you, honestly, things don't look too good because, the Kurdish armed forces, well, the Kurdish population in Iran is about 10%. So next, you'll see the Persians and the Azerbaijanis, well, the Besa-Bailan people, teaming up. So here, I think you really need to keep an eye on things. Just watch this. When the Kurdish armed forces enter and start resisting, if the conflict drags on for a long time, it means it'll be even harder to resolve. Anyway, just keep watching what happens here. Honestly, I don't want to keep reporting on or talking about military news all the time, but right now, this is what's having the biggest impact on the market. It's an uncontrollable variable, so you really have to keep a close eye on it. Speaking of this, crude oil and natural gas still seem pretty cheap right now. If you compare it to the situation during the Russia-Ukraine war in 2022, back then the conflict was targeting Europe's pipelines, crude oil pipelines and natural gas pipelines. So, of course, that's a different situation. The impact on prices in Europe will be more obvious, but let's keep watching this. The key point is still whether transportation through the Hormuz Strait can remain smooth. If, after 2 weeks, things start to change, if it really gets blocked and hardly anyone can get through, then wow, this problem will just keep getting bigger and bigger. Also, let's take a look at safe haven assets. Yesterday, probably because of this news, the US dollar fell, but today it has started to stabilize and rebound. As for gold, it rebounded yesterday after stopping its decline, and today it's continuing to rise slightly. All right, so let's talk to everyone about that. Don't lose confidence just because gold has been fluctuating recently. I think if you take your time and as long as you're not using too much leverage and you're holding some positions in precious metals as physical assets, then there's really no rush. I think just be patient, hang in there. Because when the market first starts to fluctuate, some people want to raise cash, so the assets that have gone up a lot tend to get adjusted. But the thing is, if it's not an urgent situation, over time, the stronger assets will stand out while the weaker ones will fall behind. Okay, so silver yesterday basically stopped falling. Wednesday was also a day when it stopped dropping, and today it's been more volatile. Next, let's look at US Treasury yields. Wednesday was an up day, and Thursday continued to rise. This is actually pretty bad, as we just mentioned. Just now, wasn't there something, if I'm not mistaken, it was about the Swiss tax, or was it? Michael Hath's supervisor, I think his name is Jordan, or maybe it was a name that sounded Middle Eastern. We mentioned him before, and at that time, he brought up something. Bond yields will bounce up, so you need to pay attention to this. This is different from the traditional idea of safe haven assets. The downward pressure on the prices of small and new bonds might be even stronger. Yeah, so the main thing is that everyone gets grady when things are going well, because after this incident in the Middle East, it'll affect oil prices. And once oil prices are affected, it leads to concerns about inflation. So there will be worries about inflation and also concerns about trade and fiscal deficits. So you need to be careful about this part. I think the yield on US Treasury bonds might actually drop here in the short term, but overall it could fluctuate and move higher, so pay attention to that. Now, moving on to the second topic, which is about progress on tariffs. Of course, Besant made a statement about this yesterday. This week, they might raise the so-called universal tariff from 10% to 15%, since the reciprocal tariffs have already been canceled by the other side, because it was ruled illegal. And today, there's been some progress. Yesterday, Besant also came out and saw the court statement. So they're being told to stop collecting this tariff. Then Besant responded to this yesterday, saying that this needs to be addressed. The 15% could be implemented very soon, but they also honestly said that after authorization, it would take 150 days. Also, they mentioned that they want to use Section 301 and Section 232 to replace these reciprocal tariffs, but the progress has been really slow because usually these public hearings usually take 3, 6, or even 9 months. Then he said it would be more favorable, but honestly, that's pretty tough. Taiwan has dealt with Section 301 before, and this time we've also encountered Section 232. The thing is, these can only target products, it's not comprehensive. So here we can only say that it feels a bit stronger, but the problem is that it takes a longer time. Also, for companies, there's a bit more room to find a window of opportunity. So all we can really say is, so that's really how it is. But we did see some better news. There's been a bit of a softening regarding the issues in the oil market. It was mentioned that in reality, the market supply is facing conflicts. Trump has taken some supportive measures, mainly referring to crude oil price protection, crude oil insurance, and escorting oil shipments. But I want to tell everyone, right now the issue isn't with the suppliers or with crude oil production itself. It's a logistics problem after the crude oil has been produced. So this still poses a significant short-term risk. In addition, this is pretty interesting. He said that if oil supplies from the Persian Gulf are disrupted, China will face huge risks because more than half of China's energy comes from that region. They might have bought 95% of their crude oil from Iran, but obviously that's stopped now. So right now, that so-called deep concern for China's interests, honestly, it sounds like a weasel wishing a chicken Happy New Year. So let's just share this with everyone here. Feeling pretty good about that. On another note, the U.S. federal court has made some progress. The main thing is they've issued an order requiring the U.S. government to stop calculating these tariffs. So he said, this is customs. Actually, it should be the Court of International Trade. This is a relatively rare type of court, and it's a federal court. They're basically telling you about their jurisdiction. It's actually more of a specialized court. So in any case, they've issued an order. This order should be effective, so Customs has to stop calculating tariffs. I especially want to explain this to everyone. When it comes to major U.S. ports with large import and export volumes, unfortunately, they're all located in Democratic states. That includes Philadelphia on the East Coast, then New York, and a bit further south in Virginia, there are some ports. Well, there's one main port. Further down, there are ports in North and South Carolina, but the conditions there aren't great. The water isn't deep enough, so the cargo capacity is limited. The same goes for ports along the Gulf of Mexico. The water depth at those ports is also an issue. The situation isn't great there either. On the West Coast, Los Angeles and San Francisco, can't remember if San Francisco has a port, but anyway, there's Seattle, or rather SeaTac, which stands for Seattle-Tacoma. So these three ports, yeah, these are the main ones. So there's one in Silicon Valley, then in Southern California, there's LA and Long Beach, and then there's the one up in Seattle, Washington. Those three. On the East Coast, it's mainly Philadelphia and New York, those two ports. All these ports, they're all in Democratic states. So let me tell you, it's really hard for Trump's tariff war to succeed. Why? Because customs are controlled by the Democrats. And there's a lot of factionalism here. Three-headed leadership is really common. That's just how America is. You just listen to your boss, and your boss listens to their boss, and so on. So when Trump tries to push something, if there's resistance from someone important, it might not get carried out at all. So what I want to tell everyone is that this order to stop the calculation, I believe it might actually be enforced. And then the judge even scolded them, saying, why is the government still operating these financial tariffs illegally? And now they've already started issuing injunctions. Also, he was assigned to handle the tax refund lawsuits. Previously, it was said there were about 2,000 cases, so he's definitely going to be busy with that. And then another related news item is this one. The European Parliament said it would suspend the approval process, and the reason is that they can't figure out what exactly you're doing with your tariffs. They want you to clarify things first, and then they'll proceed with the process. Of course, Europe is a much bigger player, so they're in a position to say things like this. So this is basically all related to tariffs. Next, let's quickly move on to the economic data. The economic data released yesterday, what's important is right here. The ADP numbers were better than expected, but people say it's hard to put a really positive spin on it. But first of all, the previous figure was revised downward, and secondly, this time it's only 63,000. Honestly, I'm telling you, that's correct. Although expectations were also at a recent high, honestly, it's just not that high. And then, on the other hand, the S&P Global Services and Composite PMI figures have also been released. We just use these as a reference because, honestly, Americans still pay more attention to the ISM Manufacturing Index. The ISM Services Index actually came in surprisingly strong. Why did the index go up? Because the prices paid component actually dropped. So there's growth without inflation. It's basically a dream scenario. And then, if you look at new orders, it jumped to 58.6, which looks really good. We'll take a closer look at this in a bit. So of course, just for your reference, this is the ADP data. The main thing I want to talk about is AT. He mentioned before that the sources of growth in this assessment are mainly education and healthcare services, as well as construction and the information industry, that is, the IT sector. Now, in the southern regions and among small businesses, those with fewer than 25 employees or actually fewer than 20 employees, these small businesses are the most robust and optimistic. Looking at it this way, things seem pretty good. But the key point is, did you notice the red line I drew at 100,000? It's been a long time since we've seen a number go over 100,000. That number honestly hasn't gone over 100,000, so it's still a relatively weak situation. In other words, as you can see from today's layoff numbers, it really reflects a no firing, no hiring situation. There's neither layoffs nor new hires. This is still a pretty stagnant situation. On the other hand, the significant expansion and growth in the service sector has risen to 56.1, which is actually quite an impressive figure. It is important to note that this was before the recent conflict involving Iran, by the way. The service sector, which is pretty important to the U.S. economy, is actually strengthening, and it's a broad-based strengthening. For example, there are some cases like 14 service industries experienced growth, while 3 saw contraction. New orders reached their highest level in over a year, and about 1/3 of orders increased, which is the highest in 3 years. In addition, exports have clearly strengthened. As for business activity, what we call business activity, in May 2024, it saw the fastest growth. Most importantly, prices have been going down, which is a positive detail that everyone is paying attention to. Then, prices have dropped to their lowest point in a year, and inventory has increased. Overall, these are all pretty positive signs. So what we're seeing is, plus there's something called new orders. New orders represent demand. So yesterday, the service sector numbers were pretty good. In fact, yesterday, aside from that news, specifically the news about Iran calling for peace, the stock market was actually boosted by positive economic data. Also, the Federal Reserve released the Beige Book a bit later yesterday. The Beige Book was pretty lukewarm, nothing particularly good or particularly bad. That's basically the gist of it. It mentioned that a slowdown in spending is dragging things down a bit. The slowdown in spending, consumer spending in particular, has been dragging down retail sales. So overall, things are still looking pretty okay, but the main point remains. This time it's the Cleveland Fed, the Cleveland Federal Reserve, that compiled this on February 23rd. But when you look at these numbers, you can tell they don't include the situation with the US-Iran conflict. So that's something to keep in mind. The data looks relatively good, that's true. But the only variable is that after this major event happened, things might look quite different next time. So we'll have to see. What we'll probably see is either concerns about growth, worries about economic growth, or rising inflation. Basically, that's the kind of information you're seeing here. But as for the Beige Book that was released yesterday, it seems to show a relatively moderate situation. Yesterday, a couple of Fed governors came out and spoke. Murin, for example, advocated for a rate cut. He said that for now, the situation in Iran won't really affect their judgment. He said the impact is minimal. That's basically his take. Also, there was a smaller piece of news yesterday that most people probably missed. The White House officially announced the nomination of Kevin Walsh for the music seller. After that, they're basically preparing to schedule the case and go through the process. It's already early March, so in terms of timing, it's not really early, but it's not too late either. So this should have a good chance of passing smoothly. By the way, take a look at tonight. Actually, we can check it out in a bit. The numbers released over there have pretty much all come out. The rate of layoffs in the challenge report is much lower than expected, if I remember correctly, which is good. Then there's the import price index, and non-farm productivity is positive. The main focus is on the number of people applying for unemployment benefits. So theoretically, there shouldn't be any surprises there. And that's about non-farm productivity. The numbers for the fourth quarter just happened to come out when the government shut down, as some people have mentioned. These numbers might be distorted, you know? Also, there was a good one yesterday, Broadcom's earnings report. Let's talk a bit about that situation. Overall, things look pretty good. First, their actual revenue was $19.311 billion, which is better than the estimated $19.258 billion. Year-over-year revenue growth was 29%, meaning compared to the same period last year, it grew by 29%, which is pretty good. Earnings per share were $1.50, which is better than the estimated $1.43.7, so that's also a pretty good performance. As for gross margin, for the quarter it was about 76.99%, roughly 77%, while the estimate was 76.87%. That's not bad at all. In the previous earnings call outlook, they had projected that gross margin would go down, so people were a bit worried about that. Now, another thing, the AI business is definitely the main highlight. Semiconductor revenue reached $8.4 billion with year-over-year growth of 106%. If you look at that compared to, if you look at this, the total revenue is $29 billion, which is much higher. Now, for the Semiconductor Solutions division, revenue is $12.5 billion. Even though the base is pretty big, the year-over-year growth is a bit lower, at about 45 to 52%, but that's still really strong growth. So in other words, whether it's semiconductors or AI semiconductors, which should be included under semiconductors, the overall sales performance for these related businesses has been really strong. Of course, Broadcom also has other businesses, like software services. There's VMware, which is a software service, so that's another strong area. In addition, their financial outlook is also pretty good. For the second quarter revenue, they just announced the first quarter results, and next they'll announce the second quarter revenue. The year-over-year growth is 4%. And for AI semiconductors, the expected growth is 140%. EBITDA remains at 68%. This isn't just a gross margin number he gave, but rather the EBITDA, which is at 68%. They also mentioned there are 5 major contracted AI customers. These are ASIC clients with multi-year agreements locked in. It's expected that by 2027, AI chip revenue will exceed 100 billion. It looks good. We'll check for any drawbacks shortly. Any issues will likely surface here. We won't repeat ourselves later. So, first of all, the customers aren't diversified enough because there are only 5 major clients. Okay, the second point is that the revenue from these AI chips is projected for 2027, and it's supposed to reach 100 billion, but it's not clear in which quarter the cumulative revenue will hit 100 billion. He didn't specify that. Also, the revenue projection looks impressive, that's true, but we don't know exactly when next year this will actually happen, so that's a bit of a concern. Because, of course, he wouldn't make things that clear. So when the market starts nitpicking, this is one of the areas they'll focus on. Also, yesterday they announced a dividend, and they launched a $10 billion stock buyback plan. These pieces of news seem pretty positive. Another good point is that the CEO, Hogan, who is Malaysian Chinese, emphasized that momentum is accelerating. The growth momentum is picking up, which is a good thing. But the problem is, as I just mentioned, there's the issue of customer concentration. Second, there's pressure on gross margins, and then the non-AI business is weak. And actually, gross margin and the non-AI business are tied together. What we're seeing now is that the gross margin is actually better in the non-AI business, but it's relatively. Sales are relatively slower and lower. Now, the AI business is doing better, but because there's more competition, its gross margin is actually a bit lower. So that's a bigger issue. It's one of the main things people are critical about. Then there's supply chain and inventory risks, which of course includes some inventory and also supply and supply chain issues. And don't doubt it, when Broadcom places orders, it seems they're also placing them with TSMC. So everything is bottlenecked at TSMC. Then there's the risk of market expectations in core news. Basically, when news hits the headlines, people start selling their shares. That's a risk. And then there are concerns about cyclical trading. Sorry, I typed concerns wrong. So AI cyclical trading, which is actually similar to, it's actually the same issue that NVIDIA is facing. And finally, there's systemic risk, like the problems that come with every war. But overall, it seems like its fundamentals are pretty solid. But actually, I think it's better to wait a bit. There's no need to rush. Wait until the market really stabilizes, then look for opportunities. Why do I say this? Well, if we look at after hours and pre-market trading today, the stock went up, but there wasn't much action. So even though it went up by 7%, that's good. But the thing is, you might be able to easily recover to the 200-day moving average. The problem is, though, you still have to deal with the monthly line, the 20-day, and the 50-day moving averages, which are all pressing down. Maybe after today's rally, there's a better chance it'll move sideways for a while, but after this consolidation, it doesn't necessarily mean there will be an immediate opportunity for gains. So you still need to pay attention to the systemic risk here. That's basically it. The impact of war on the market is something to consider. So here, our suggestion is that the numbers look good, which proves that the fundamentals should be solid and sustainable. But it's really about timing. Getting the timing right is key. That's basically what we want everyone to keep in mind. Now, yesterday, another topic that came up was Basin's body care products, like shampoos, body washes, and lotions, those kinds of things. Basically, they said the transformation is showing results, but it will still take some time before it achieves even greater success. However, on Wednesday, the stock still went up. As for the trendy brand AMF, it seems that the results didn't meet expectations, so it went down. And then there's Dicom, this company was actually a surprise. Honestly, if it hadn't been mentioned, I wouldn't have known about it either. The day before yesterday, we talked about Tidewater, which is the company that operates the offshore platform supply vessels. That's actually a really unique company. And then there's this one, Dicom. This company specializes in that infrastructure company. This one works with power plants and is related to ARJR's rise. Even though its stock prices dropped, the demand for its data centers is still through the roof. And then Jack Daniel's parent company, Brown-Forman, this company was relatively weak, dropping 6.65%. The main reason is that during the earnings call, they mentioned that over the next 2 years, costs and gross margins might face higher costs or margin compression, so it's relatively weak. Yesterday, after the earnings reports, the more important ones we saw were about 3 companies. Rigetti, which I think everyone was pretty interested in before, is a quantum computing company. But like I mentioned yesterday, as far as I remember, they're still losing money, and the results came out the same. But their commercialization process still seems pretty far off, so after-hours trading saw a drop of more than 3.5%. Okay, so this software company and that one are both a bit weaker. Also, there's this company that sells tickets for ball games. Concert ticket sales are also a bit weak. On the other hand, there's one company that's actually going up. Okta, the identity and access management company, is doing better, so it looks like their stock is rising. Also, American Eagle, the popular clothing and apparel brand, has launched a brand new sub-brand label called Aerie. It seems like this has significantly given them a major boost. But it's expected that this year will only see mid-single-digit growth, so the growth momentum isn't strong. That's why the stock dropped after hours. As for the earnings reports coming out tonight, most of them are related to retail. For example, KR. All right, so this one is a grocery store chain, like a big box retailer or supermarket. Burrell sells clothing. Victoria's Secret is a lingerie store. And then there's this one. Also, after hours, Gap is included too, right? Most of these are retail, so there's not much to say about that. Then there are 2 software companies, IoT, that's software, and Guidewire, that's also software. Actually, for software companies, you really have to look at their financial reports to see if their stock will go up after hours. If, in general, they don't go up, then the competition in the software industry is still really intense. Okay, next, Marvell, which is a semiconductor component company. Actually, this is related to Taiwan, since there are companies here that take their orders. So it depends on how their financial report turns out. Basically, anything related to AI hardware should be doing well. All right, so next, let's take a look at how the market performed. The S&P was up yesterday, but the problem is, it's moving sideways, so it's still pretty volatile, and there's definitely still some pressure. And then, as for the broader market, there was a pretty big rebound, but the volatility trend is still more, it's not really an upward trend. But the thing is, you have to pay attention to the volume trend. It's closing below the 20-day moving average, and if it doesn't stabilize above that, it'll actually start to look a lot like the S&P, the non-equal weighted trend. And then for the NASDAQ, yes, it's rebounding, but you can see the 20-day moving average is acting as resistance. Same goes for the Magnificent 7 stocks. Yesterday's gain was pretty significant, up 1.52%, but it's still facing resistance. In a bit, we'll also take a look at some of the key component stocks of the Magnificent 7. Among those 7 stocks, I think Apple looks okay for now, but when I look at it more closely, I'm actually more concerned about Google. Why do I say that? Well, Amazon seems to be more stable and just moving sideways, but Google is the one I'm more worried about because when Gemini 3 was launched before, it was moving sideways during that period, so it looked pretty good and had a nice run-up, but now it seems like it's slowly given back most of those previous gains. The most important thing is still its 20-day moving average, which kind of feels like it's putting a lid on things. If it doesn't seize the chance to bounce soon and at least form a sideways consolidation, then honestly, the downward pressure will be pretty strong. But you have to remember, it used to be the strongest one, so once it starts to weaken, then the question is, who will step up to lead the overall market sentiment? That's going to be a big problem. So Facebook is going up, and Microsoft is also rising, but Microsoft is pretty weak. And I even heard that today someone might have downgraded it, so someone lowered its stock rating. That's not great. As for Nvidia, it's moving sideways, which is still considered strong. Even though it dropped for 2 days, it's doing relatively well. Today, it might be doing better thanks to news from Avago. On the other hand, Tesla is more volatile. As for Broadcom, yesterday saw a bigger increase, up by 1.93%. Also, I want to mention that the 5 stocks that rose more than 5% were AMD, Intel, Micron, Credo, and Rambus. The biggest losers were Skyworks, Covid, Lion Guan, and Supermicro. So, it looks like that's about it. Volatility has definitely increased. Of course, it's natural for strong stocks to turn weak and weak stocks to turn strong. But we should pay more attention to Micron. It's still maintaining a sideways trend, which is at least some good news. However, overall, this is a strong sideways movement, so it needs to keep consolidating. As for AMD, there's been a dip followed by a rebound. Intel is basically still moving sideways, and as for Oracle, it looks like it has climbed back above the 20-day moving average, but the overall downward pressure is still pretty strong. Futures are still quite volatile. Now, let's take a look at this. So, looking at the performance in the text here, you can see, like we've been saying, the issue of war is still a big problem. You can see the decline is starting to widen again. Why do I say that? Because in this, when we were wrapping things up, closing the files, it was around 6 or 7 o'clock, maybe a bit after 7. You saw, right? The gains were basically negative, and a couple were just small increases. But as you can see now, looking at it here, it's starting to drop again. The pressure is pretty significant. However, there is some good news today. TradeDex, this software company, is planning to collaborate with OpenAI, so it looks like their performance is a bit better. All right, so Sherwin-Williams. I remember they're a paint company, right? They sell paint. This one actually went up, so that's good. HR is down the most, so maybe it dropped quite a bit the previous day, and now it's rebounding. As for Avago, it's doing better because their earnings report was good, which pushed the stock up to the 200-day moving average. But overall, the market atmosphere still needs to be watched closely. So, Fino performed well, and then there's industrial gas company LYB, also the gambling site BKNG. Actually, chemicals rebounded. Today, the top 20 or so stocks all bounced back with gains over 1%. It looks like some stocks are still performing pretty well, while the ones that dropped are still down. Well then, Corning dropped quite a bit, and if you look at the biggest losers, the top 20 stocks that fell all dropped by more than 1%. On the other hand, the good news is that among the biggest gainers and losers, there aren't too many heavyweights. The only heavyweight that dropped significantly is AMD. That one has a bigger weight, yeah. And there's also Walmart, which is another one dragging the index down and making it weaker. So it looks like the market is still a bit on the weak side today, but it probably won't. A situation where the market crashes. But it really depends on this. The key point is still to watch oil prices. As long as oil prices don't break out above today's upper shadow range, that would be a better scenario. It means things have worsened, but they're not out of control, which is a relatively good situation. And then it looks like the US dollar is rebounding, and this one is also moving quickly. This is pretty much the same as when I took the screenshots for everyone. Today, it's still just a slight fluctuation. Gold is similar too, and this is the S&P mini futures. You can see from this performance that previously, when the basis points turned positive, it started to weaken again. Okay, let's just take a look at the fund data today since it's already been released. The number of layoffs has dropped. It's compared to the same week of the previous 52 weeks, so the numbers can swing quite a bit. The financial numbers are more obvious, and as for import prices, it doesn't look strong. It's lower than expected and also lower than before, similar to the previous revised value. As for non-farm productivity, this came out a bit high at 2.8, but it will come out, and labor costs here are also relatively high. Usually, of course, when labor costs increase, it will also help boost productivity, so you don't need to worry too much about this number. Generally speaking, this number will be absorbed by GDP, so it's more of an intermediate figure. Okay, so let's not just focus on one thing. For example, the number of people filing for unemployment benefits is actually pretty strong, 213,000. That's considered a stable performance, so it looks like the US job market, basically, things are stable. It's still that no firing, no hiring situation. There are fewer layoffs, but also fewer people being hired. That's pretty much confirmed. And in addition, we'll wrap up here for today. The main thing we want to share with everyone is to show you why we're being a bit more cautious. This is the largest sector in the US for full-time positions, the S&P's largest sector. Let's take a look at the biggest full-time sector. Is it information technology? Yes, that's right. This is the 3-year weekly chart, which is pretty important. The reason I'm still very cautious and not ready to turn optimistic all of a sudden is because of what I see on this weekly chart. If you look, the weekly trend has been going down, right? Especially since last year and into this year. The weekly charts for these past few weeks have all been trending downward. This is something to pay attention to. If it breaks through and there's a clear drop, you have to be wary of a situation where it just keeps falling without looking back. If that happens, it will have a big impact on both the Taiwan and US stock markets, but especially on the Taiwan market. Why? Because its weighting is 32%. That's almost a 33% weighting in this sector. So I just want to remind everyone about this. Next, let's take a look at the questions everyone has raised. Let's move on to the questions. As for talking about politics, honestly, I really can't get into that today. I would much rather talk about economic data. I could go on about macroeconomic data for a long time, but the problem is, well, it depends on whether Mr. Trump gives me the chance to do so. All right, and as for the situation in Taiwan, well, we're just not going to respond to that anymore. Okay, and then, all right, so let's take a look. So let's push the CPU to this photonic co-packaged integration. Actually, I think whether this photonic integration is absolutely necessary or whether you just focus on copper interconnects and photons isn't that important. This is definitely a thing. You can figure it out yourself, right, when you're doing this? In the process of industrial manufacturing, right? Of course, you'll make adjustments, and it's not like you'll only focus on just one specific thing. It's pretty rare for someone to only stick to one type of technology. Why? Because technologies all have this complementary nature, and each has its own strengths and weaknesses. There are always pros and cons, you know? And sometimes you'll run into issues like durability. So you really don't need to get too hung up on this. So that's basically how it is. Now, about Heenan stocks, let me tell you, Heenan, you need to know about Heenan stocks. Since this is a public broadcast, I can only talk about it in a limited way, but there are a few concepts you should know. Henan is a place where you really need consistent weather for results to show. As for the industry, the construction period is really long. Some industries just take a long time to build, and that has nothing to do with whether they're good or bad. But the problem is, stock prices react in the short term. So what I want to tell you is, even if the stock market looks good, but when to buy and at what stage, well, as for the Henan Group, might require a bit more face-to-face communication. If you're one of our Quinu clients, I suggest you get in touch with your advisor, because we actually covered this topic last year. And then, including your advisor, we'll try to provide you with even better service. I can't really go into that much detail here, so So what did the little notebook say in 2022? Okay, Stephen, we need to talk about this. No, actually, he was talking about the little notebook. In 2022, the little notebook said, well, that was when the Russia-Ukraine war broke out, right? Then oil prices shot up, natural gas spiked, and everyone was chasing after those things. But then later, prices fell back, and now we see, well, the Russia-Ukraine war is still dragging on. In other words, what he means is that the market doesn't really expect it to end anytime soon. That's basically the point. So don't get fooled by what's in that little notebook. All right, Stephen, we actually talked about this on Monday. We talked about this on MF10, right? Let me tell you, meow, this is great. 5193, let me tell you, this issue, this is something we need to keep following up on. All we can say is that we have to keep tracking it. But all I can say is, our senior analysts here in the local office, as well as everyone on our rotation team, are already on the same page about this. The chief has given instructions for us to follow up. Right now, it does look a bit suspicious, but don't just write it off completely. We need to keep an eye on it and track what's really going on, what the actual situation is, and how it's being handled. We especially need to talk about this. This concern is something everyone keeps bringing up, which is why we're not exactly super optimistic about the market right now. That's the reason. We have to keep tracking this issue closely. So, all right, so the war is affecting the financial markets, right? Actually, it's not too bad. URA should be, it's an ETF. If it's an ETF, let me tell you, it's probably just, if you really want to compare and you're investing regularly over time, then I believe you're probably focused on long-term growth. So all I can say is that you'll need to be a bit patient and wait it out. But if you're looking at a smaller scale and want to see short-term revenue and profit performance, I mentioned the natural gas power generation sector a few days ago. That sector is where you can see results relatively quickly. In other words, after building a power plant, in about 2 years you'll see it completed, and then it can immediately start trial production and go into operation. This is more tangible, and you'll feel like you can get a handle on it much faster. Compared to nuclear energy, which might take 10 years, even if construction started last year or the year before, you'd still have to wait 7 or 8 years to see any real results. Honestly, at my age, I just can't wait that long. All right, that's all I can say. So that's about it. Our program will end here for today. If there aren't any other questions, we'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.